What's going on, guys? It's your boy NTG back at again with another video. In today's video, I will be providing you guys a free day trading course for all levels. So if you are a complete beginner, if you're from zero, you have no idea what day trading is, if you're an intermediate trader or even an advanced level trader, this is going to be for all levels. Okay, so I will have a full course. I mean, when I say full course, I mean full course. The videos are going to be, they're going to be 10 plus videos. I'm going to put a whole playlist, like a full course. Each video is going to be anywhere between an hour to 2 hours. Some of them can even go up to 3 hours long. I'm going to be covering the steps from how to get into trading from the very beginning of learning what the market is, lot sizes, risks, everything. We're going to break it down all into one. So if you're new to trading, or if you have somebody that's trying to get into trading, you can send them this exact playlist all for free. All right, guys. So this is going to be a very detailed video. It's going to be hours long. So this is going to be an actual course. So I know I don't have anything on my YouTube channel. That's why I decided to do something like this, because all of my videos were teaching you guys price action, but I never had like a beginner course, right? Like from zero, like you know nothing about trading. I never had a video like this on my channel. And I know I see some comments sometimes in my videos like, hey NTG, like, can you give like a beginner's course? Like, I'm kind of new, I don't really understand what you're saying. So I wanted to leave like a nice little course for you guys to be able to come back to for all levels, because this stuff should be free, right? And we should be able to learn how to day trade. So this is what the video is going to be for today. So welcome. All right. If you're new here, okay, my name is NTG. Okay. I am the founder of NTG Academy. NTG Academy has been going on 5 years now. We're celebrating 5 years. Man, it's crazy how fast time flies, but NTG Academy has been around for 5 years now. All right. I have been a profitable trader for 8 years now. Okay. Consistently, but I've been trading for 10 years. So I started trading back in 2016. So almost 10 years now. And that's when I first started trading. So if you're new here, this is who I am. If you're new to the channel, welcome. Welcome to the Academy. All right. And I have been live trading for 4 years now. So if you don't know what that means, live trading is essentially just, I have been doing live trading every single day with my Academy members. So I get on stream and they watch me trade. They watch me live trade. They have opportunities to enter live market time with me. So that's what I've been doing consistently every single day, Monday through Friday, as the markets are open, for 4 years. Okay. And then also, I know how to trade Forex, metals, index, futures, cryptos, and even stocks. Okay. And some of you guys are brand new here, so you don't know what that is. And in this video, we are going to go over everything. So like I said, this is a day trading course for everybody. And even if you don't know anything about trading, this is going to be your video. All right. So like I said, today we're going to get started on becoming a full-time trader. And we're going to focus on Forex, metals, index pairs, and futures. But today, for this video, we're just going to do Forex, metals, and index. We'll get into futures, cryptos later. It's not really needed right now. We'll get into it on like another video. But right now, we're going to focus on like the main markets that we trade here. All right. So these are going to be the lessons. All right. This is going to be a lot. Like I said, we're going from zero. So you guys see here, we're going to talk about what is day trading, how to day trade, brokers, understanding margin, charts, analyzing the markets, supporting resistance, Japanese candlestick, moving averages, price action, chart indicators. We're going to be going, I'm going to be making this a series, guys. Okay. So every single time I upload, videos will be uploaded every week, by the way, available on my playlist. Like I said, my goal is to create a full course for everybody here, completely for free, so that you guys will be able to learn every single thing that I have listed here. All right. And today, for today's lesson, our first video, we're going to be going over what is day trading, how to day trade, brokers, and understanding margin. So that's going to be today's video. And then the next video, lesson 2, will be charts, how to analyze the market. And then lesson 3 will be support resistance. And you guys get the point, right? We're going to work all the way up to future stock, prop firms, and I may even add even more, right? So this is going to be a whole playlist, 10 plus videos long, each video hours long, full of information that you guys can take with you completely for free. Now, why is it completely for free? Well, because you guys should be able to learn things that are available to you online. Okay, this should be free. You can get all this information online for free. There's no reason why I need to sell you a course that you can learn for free, right? And you're like, well, NTG, you have an academy. Well, yes, I have a Discord, but that's completely different. And I get comments all the time, people telling me that I'm selling a course. All right, I have a Discord. That's completely different from selling a course. Okay, if you join my Discord does not teach you how to day trade. Like, I'm not in there teaching you what is Forex, how this is how you place trades. That's not what that is. My Discord is live trading. So technically my Discord is for already experienced traders. It is beginner friendly, but I'm not teaching you the basics. Like, you can go online and learn that for free. That's why I don't sell that. I do live streams where I'm on the live market, I stream, and my academy members come on those streams and they watch me actually trade. They actually see me place trades. They see how my strategy works. They see if I'm winning trades, if I'm losing trades. That's what my Discord is. It's not a course. And so that's completely different from other Forex gurus out there that claim they're traders, but then they sell you an actual course. I do not sell an actual course, guys. All right. So this is why it's completely free. And there's no gimmicks. So there's not going to be, oh, at the end of the video, okay, you have to join this to get the rest of the course. This is all going to be available to you on my YouTube channel. So if you're just watching this from day one, you only have one video. But if you're watching this in the future, maybe 2026 or far in the future, you probably have all the videos by now ready in the playlist. So you don't have to wait for every single video to drop every week. So you can go ahead and just watch all of those videos for all the content, all the knowledge. All right. And I just want you guys, before we go ahead and get started, I want you guys to know that learning how to day trade takes time. Okay. It takes a long time. There's hours on top of hours. It's like going to school to learn how to be a lawyer. Okay. Or anything in school. It takes a long time. Like, you watching a quick 15-minute video on YouTube on how to day trade is not going to be enough. I promise you. 30-minute video is not going to be enough. So if these videos are extremely long, that's just what it is, guys. It's going to be this long. It has to be for me to give you all the necessary information. It can't just be a quick 15-minute video with cool edits and throwing like flashy edits at you and stuff like that to keep you engaged. That's not how you're going to learn how to day trade. And learning how to day trade is going to take a lot of time. So make sure before we start the lesson, make sure you guys have the time to sit down and watch the whole video. Make sure you guys have a notebook or notepad or however you like to take your notes. Make sure you have that ready. Or if you like to record audio into notes, you can do that as well. But just know that this series is going to take a long time. So if you guys really, really want to learn how to day trade, this is going to be the video for you. All right. And also, why is this free? Auntie G, why are you doing this for free? Like I said, because you guys can learn this stuff for free online. And I know if you're watching this video right now and you are new to trading, or if you've been a trader for a long time, I know you went through a situation where you followed a mentor, right? And they were selling you this course for $500 to $1,000+ right? They're selling you this course and you're so excited, right? You bought the course and everything. You're like, man, I'm so excited. I'm about to become a full-time trader. And then you get on the course and you see that this is nothing. What is going on here? You buy the course and you're so excited, and you go on and you're like, I already know this stuff. This is basic Forex stuff. I watched a 30-minute video on YouTube for free to learn what I just paid for. I know almost, I want to say 99% of you guys watching this video, I know you went through this moment where you bought a course and it's just free information that they took from somewhere and they just remixed it, and it didn't help you at all. Okay. So you're just sitting there. Now you're disappointed. You just wasted all that money on a course that you didn't even have to pay for. So that is how they get you. That's where the scam comes from. All right, guys. So this is why it's for free, because you guys can learn this for free. All right. You don't have to go buy somebody's course to learn how to do basic day trading. All right. Don't be fooled. Do not do it. You're going to learn how to day trade right here in this video right now. All right. So let's go ahead and get into it. Now, first of all, why should you listen to me? Okay. So you're like, okay, Auntie G, okay, we just met, why should I trust your judgment? Why? Well, I've been consistent for 8 years straight, ongoing. So I'm an actual trader. I trade every single day. Okay. I'm not those traders, or quote unquote, those guru traders that place one trade a month. They make 100, 200K. They post it on social media, say how they made this much, and then they don't trade for the rest of the month. They have that one trade for 1 month and then they don't trade again until the next month. Okay. I'm not like that. I am an active trader, and I've been consistent that way for 8 years straight. I trade every single day. Every single day I wake up, I get on live stream with my academy, and we trade. Okay. Now we don't place a trade every single day, but we trade. We're still on the charts every day, regardless. I am an active trader for 8 years straight consistently, and those 8 years are all profitable years. Okay. Second reason why. Well, I have also tested my skills on prop firms, which you can see here. I've made well over $300,000 in profit. Well, not in profit, but in payouts. Okay. With prop firms. Okay. That's my lifetime payout there. And then I've been with other prop firms as well, where I've had gotten paid out well over 100K as well with other certificates. So I've done this in less than a year, by the way. So less than a year, was able to make 300,000 in payouts. So that shows you enough of how active I'm actually am in these charts. Okay. And then lastly, I have experience in 90% of the market. So I went from Forex to metals to indices to crypto to futures. I know how to trade all these markets, all these charts. I have experience in all these charts, and I have gotten payouts, withdrawals from all of these markets. So I know how it works with every single, I'm going to say 90% of the markets out there. I know how to trade, and my strategy translate to every single market that I have traded, and every single market that I transition to, I have been successful. And so that's just like a quick summary of, if you want to listen to me or not, on how to become a day trader. So yeah, so without further ado, if you're ready, we can go ahead and get started with lesson 1. Oh, and by the way, there's not going to be no flashy cars. Okay, so I'm not going to wow you with all my flashy cars and what I have and what I made in day trading. Okay, nice car does not equal good trader, guys. So just because I'm showing you guys my cars and my whips and my $1 million mansion, that does not mean I'm a good trader. Okay, that just means I market myself well. But we want to get into day trading. We want to get into the nitty gritty of day trading, not how many cars I have, not how many watches I have. Nobody cares about that stuff. That doesn't make you a good trader. All right. And so just food for thought. I just wanted to throw that in there. But we're going to go ahead and get on with lesson 1. So how to become a day trader. I know I've already been talking for like 15 minutes now, but I wanted to make sure you guys got the intro. The rest of the videos won't be that long intro. All right, so let's go ahead and get into lesson 1, how to become a day trader. Now, this is going to be for my complete beginners, and even if you are experienced with day trading already, this is going to be a great video for you guys. And why I also wanted to do something like this is to kind of just give like a restart for everybody, right? So if you have been away from the game for a while, or you're kind of just lost on like what exactly you want to do with trading, you've been trading for a year or two now, I think this will be a good reboot for you as well. So anybody looking for like a nice reboot into day trading, you want to kind of just forget everything that you learned. You want to just dump it all. You want to start fresh. You want to restart. This is really good for you guys. Okay, this is exactly what I did before I became profitable as well. So I was trading for 2 years first without having any consistent profit. And then I took a 3-month break and I kind of just rebooted myself. I got rid of all that information and then I just relearned how to day trade from scratch. I just relearned everything. And sometimes when you do that, when you get rid of what you know and then you just relearn, everything starts to clip differently. So this could be the video for you as well. Even if you're not a beginner, this could definitely translate into your trading. All right. So let's go ahead and get into it. So the first things first, why should you start day trading? Well, simply enough to make money. We're in a different era now where you need a secondary income to even, be comfortable. And so being able to have the ability to make money in your own volition, your own will, this is going to be a great skill to have to add to a secondary or passive income. Okay. This is going to be something that you guys can just do. I believe everyone should have a second skill to be able to make money. And like I said, in this world today, having a second income to be comfortable is almost a necessity now. So this should be the main reason why you should start getting into day trading. And then secondly, the markets are a lifetime. So the markets are not going anywhere, guys. Like the markets will be here forever. You guys will be able to trade the markets whenever you want. They'll be on for the next 5 decades, however long the markets, the world is going around. The markets will be here. Okay, so you don't have to worry about it like a job where they can lay you off at any point in time, right? You want to have a skill that will always be around with you, especially with the changes and like with AI going on and the business market is changing, technology. You want to have a skill that will help you survive with that change, and day trading is definitely one of them. And lastly, of course, freedom. We all want to have freedom. We all want to have the ability to do what we want, have the time to go wherever we want. We don't have to be under anyone's thumb. We can just have that freedom to travel or to do things that we enjoy doing. And that freedom is definitely also a big part on why you should start day trading. Okay. And then, of course, you guys have to secure your future. So like I said, that goes back into, markets are a lifetime. You got to secure your future. And day trading is definitely one of those skills that can secure your future. All right. So let's go ahead and look at what we can trade. And sorry, guys, this is going to be a long video. So if I take some time to drink some water or anything like that, just excuse me. I want this to be as raw as possible, as if like you guys are actually in a class with your boy NTG. So I will take some breaks every now and then. So if I do, just bear with me, and then we're going to continue with the lesson. All right. So what can you trade? All right. So let's talk about what kind of markets we can trade here. So we're going to be learning Forex and what Forex is, right? So some example pairs is USD, Japanese yen, pound, USD, the Euro USD, USD, Canadian dollar, and USD Swiss. So that's just some examples. There's like over 20 plus primary currencies, and then we have exotic pairs as well when it comes to Forex. So there's hundreds of Forex pairs that you can trade, but we're going to be focusing on like the actual main things that we trade in Forex. And then we're also going to be learning metals and commodities. So you can trade metals and commodities like gold, silver, aluminum, copper, corn, sugar, etc. Okay, so we're going to be going over all these different markets, what they are, and how you're actually able to day trade them. Like, how can you day trade these pairs and make money off of them? And then we're going to also be going over index or indices. So things like NAS 100, or US 100, or NASDAQ, US 30, and S&P 500. So we're going to be going over all of these pairs that we can trade. And then, of course, options will vary depending on what type of broker you have. So whatever broker you sign up for, not every single broker will have these markets available to you. But we're going to go over that in the video as well. We're going to go over brokers and all of those things in this video. Okay. So first things first. So let's talk about what Forex is. Okay. So Forex trading, also known as foreign exchange or FX trading, is the conversion of one currency into another. Okay. So pretty much what you're doing is you're trading money, essentially, right? You're trading money. So you're trading money like the pound, the US dollar against the Canadian dollar, so on and so forth. So FX is one of the most actively traded markets in the world, with individuals, companies, and banks carrying out around 6.6 trillion worth of Forex transactions every single day. Okay, so this is well over a $6 trillion market, guys. So this is how much money is being traded every single day. All right, and so there's trillions and trillions of dollars in the market. Like, we got to get a piece of that trillion. All right, so this is exactly what we're here for. We want to be able to get a little piece of the pie. We want some of that money. All right. So, for example, so let's say you buy the pound and the dollar pair. Okay. If you think that the pound will strengthen against the dollar, meaning you'll need more dollars to buy a single pound, or you'll sell this pair if you think that the pound will be weaker against the dollar, meaning you need fewer dollars to buy a single pound. So pretty much that's how you make money in Forex. I know you have the question of like, how do you actually make money? You're just buying currencies against each other. So if you think the pound is going to strengthen over the dollar, right, and you want to buy more, then you'll buy it, or you can sell it. I also get that question too. Sometimes in my comment section, they're like, oh, how are you making money by selling, right? Because this is not like stocks where you're buying shares, right? We're actively being able to day trade in the market and buy and sell either a currency or a metal or indices. We can make money in both ways from our analysis. Okay. So, but this is what Forex is. This is what foreign exchange is, or FX. Okay. So you're just trading one currency for another. That's pretty much as simple as it gets from there on what Forex is. All right. So let's go ahead and get a little bit more in like what Forex is, right? So considering purchasing currency as purchasing a stock in a nation are similar to purchasing stock in a business. So it's kind of like that same thing when you're buying shares. It's not completely the same, but it has similarities, right? So the market's assessment of the present and future state of the country's economy is typically directly reflected in the currency's price. So you can essentially say like wherever the currency's price is showing the economic standing of a country. And when you purchase the Japanese yen, for example, in Forex day trading, you're essentially purchasing a share in the Japanese economy. So this is a different way you can look at it as well with trading Forex. I know Forex is kind of like a foreign thing to people, especially if you're like coming from stocks into Forex. That's what it is essentially. And in general, the exchange rate of a currency versus other currencies is a reflection of the condition of that country's economy compared to other economies. So the major currencies are the USD, the JBP, which is the pound, Japanese yen, the Canadian dollar, euro, Swiss, the Aussie, and NZD. Okay, so those are the major currency pairs. So if you guys want to get into trading Forex, these are the main pairs that you guys are going to be trading. There are also exotic pairs, which we will get into as well. I'll show you guys exotic pairs as well. But this will be the main thing that you're going to focus on are these major currencies if you decide you want to trade Forex. Okay. All right, this is just a little Forex chart. So this is kind of just like a Forex lingo that we have. So when we're trading, we don't say like the United States dollar. Like we just say the dollar. And for euro, we just say euro, or we just say the yen, or we just say the pound, Swiss, the CAD. You know, so that's just kind of like a little Forex lingo for you guys there. So, but I want you to imagine each currency pair constantly in a tug of war. So that's pretty much what they are, right? They're in a tug of war. So let's say the dollar and the euro, right? You have the dollar on one side, the euro on another side, and they're pretty much at a tug of war with each other. And each currency is on the other side of the rope. An exchange rate is the relative price of two currencies from two different countries. So exchange rates fluctuate based on which country is stronger at the moment. So these changes, and this is how you can make money with money. There are three categories of currency pairs. Okay, so like I was saying before, we have the major pairs, we have the cross pairs, and then we have the exotic pairs. So the major currency pairs always include the US dollar. So every time you're talking about a major pair, it has the US dollar in it. Okay. Cross currency pairs do not include the US dollar. Crosses that involve any of the major currencies are known as minors. Okay. And then exotic currency pairs consist of one major currency and one currency from an emerging market. So what that means is like you have like the Brazilian dollar or something like that, something exotic, like money that you don't really see on the board. That's what it means to have like an exotic pair. But you guys you probably won't get into that. If you want to, you can, but I will stick with just the major pairs. The major and the cross pairs is what you guys will be looking at. So you don't have to worry about like exotic pairs and stuff like that. That's just more information to know. All right, so that's what Forex is. That's just a brief summary of it. That's pretty much all you really need to know about what Forex is. And we're going to really tie this video into like just how to day trade. So I want to make sure I get as much information as possible. Like I said, these videos are going to be long, so I don't want to overwhelm you with so much information yet. Okay, we're going to get to that point maybe in the next video, but your boy's going to have a lot of videos out. So let's go ahead and talk about what are metals and commodities. So commodities are naturally occurring materials, are goods that are collected and processed for use in human activities such as oil, sugar, precious metals. They form the basis of the economy because the raw materials are needed for the production of food, energy, and clothing. Commodities are often mass produced and standardized for quality and quantity, which means they are priced the same regardless of who produces them. All right. So that's pretty much what the metals and commodities are, of what you'll be trading. So whenever, like for some traders, they don't trade Forex, they trade metals. So if you ask, oh, what kind of markets do you trade? And they say, oh, I trade commodities. That's what they're talking about. They're talking about like corn, sugar, or gold, right? Or if they say they trade metals, they're talking about copper, things like that, aluminum, brass, platinum. Those are other things that they trade as well. So talking about the politics side of like metals and commodities, right? So political events and policies can cause changes in prices if they have an impact on exports and imports. So if you guys saw like what's going on with all the tariffs and things like that, that has a direct impact on these metals or commodities. For example, the increase in import duty can drive up prices, right? So the prices can go up or they can go down depending on what's going on. Like a lot of the political side with metals. So if you guys watch like what's going on with the tariffs or even the wars that's happening, you will see it directly affect, because I trade gold. So that's the main pair that I trade, the main market. And I have to watch like the press conference and things like that. So I'm getting up to date on like what's going on politically. So I know like what direction gold is coming from, because that drastically affects gold. So like I said, metals that you can trade like gold, silver, aluminum, copper, brass, platinum. And like I said, again, all of these options are going to vary depending on the broker that you have, because not every single broker has this available for you to trade. But like I said, we're going to get to that by like the end of the video on like what brokers you should use, what brokers are out there that you can use to trade these pairs. Okay. And then we're going to go over like what's hard commodities. So these are natural resources that are mixed or extracts from the earth. So such as gold, silver, oil, copper, and natural gas. Okay. So soft commodities. These commodities are grown and harvested, such as sugar, corn, wheat, and lumber. Okay. You may also see commodities divided into more specific categories to account for their different purposes or the processes that are involved in their production. These categories include like energies, so metals, agricultural, livestock. Okay. So those are like the different categories that these go into with hard and soft commodities. And these are things that you can trade. So I have some people in my academy that do trade crude oil. I never traded gasoline, but it's still the market. So you can still apply these same things into the market. And then with gold, silver, copper, with metals. So you guys know exactly, what goes with what. So that is essentially what is, trading metals and commodities. All right. So now let's go ahead and get into indices. So indices is very unique, right? So index fund is a type of investment vehicle designed to mirror the performance of a specific market index. It is a portfolio of assets, typically stocks, held and managed by an investment firm. So indices are like trading stocks essentially, but not directly. So you're not like buying shares like a stock, but it's like trading a stock. That's why NAS 100 has like a similar name to NASDAQ, because it's the index fund of NASDAQ. So if you are trading indices, you're essentially like trading stocks, right? So that's how I like to think of it. It's just like I'm trading like NASDAQ, or I'm trading S&P 500 in the stock market. So by investing in the index fund, individuals purchase shares, which entitle them to a portfolio ownership of the overall portfolio and its returns. Index funds can take the form of mutual funds or exchange traded funds, ETFs, and are structured to match the performance of the market index, such as S&P 500 or NSE, Nifty 50, rather than outperform it. Okay. To achieve this, the fund invests in either all or a representative sample of the securities included in the index. These securities are usually weighed based on the market capitalization, reflecting the total value of a company's shares. So that is what indices are, the index market. But like I said, in a simple way to think of it, I think of it as like just trading like stocks. That's how I like to think about it. But you're not trading it like directly, okay? So some indices that you'll be able to trade is Wall Street or US 30, DAX, NASDAQ, FTSE, and S&P 500. Okay, so if you guys look at this chart here, right? Now, if you guys have ever worked like a government job or any company, right, and they ask you if you want to take like some money out of your check to put into investment. So this is essentially what you are doing, right? So you work, you get paid, that money goes, well, it doesn't go straight into the online broker, right? It goes into like a financial advisor, and then that financial advisor goes into like a mutual fund company, and that's where your money's going, right? Essentially where they're investing for you for your retirement plan. So you're just giving them the money's going to the mutual fund, and they are investing for you. So that's what that retirement plan looks like. But we can skip all this, right? We can directly access a broker, and then we can trade directly. We can trade like NASDAQ and everything ourselves. So we can essentially control, our money flow. We can control what we deposit, what we withdraw, the risk level. So we can control all that. And that's why getting into day trading, learning that skill of day trading is essential. So you have more control of your money and where your money's going, that access to your money. I mean, if you guys have ever tried to access your money from a mutual fund company, it's a headache, and then you got to do all this taxes and all this stuff, right? So essentially, we want to become that individual that has direct access to the online broker, and we want to be able to trade the money ourselves and make money as a passive income. So that's what we're here to do. All right. So, and index funds versus direct stock, right? So this is pretty much, like I said, it's similar, but it's still different. Okay. So let's go over like the definition of the structure of it. So index funds, right? Portfolios managed by the firm designed to track specific market indices. So composed of diverse assets, stocks, bonds, etc., providing a broad market exposure. Examples. So we have Nifty 50, index fund, sector specific fund like technology, banks, or energy. So stocks are represented as factual ownership in individual companies. So this entitles the investor to potential dividends, capital gains, and sometimes voting rights. So that's just a direct difference between index funds and stocks. Okay, so stocks go a little bit deeper. We will talk more about stocks later. I want to say when we get like at the end of the course, if you guys are interested in trading stocks, we will get to that at the end of the course. But right now we're going to focus on day trading and indices, index funds, on how you can trade those. All right. So that's just a direct difference between the two. So now let's go ahead and get into the good stuff. Now we got all the information out the way. You guys know what Forex is. You guys know a little bit about metals and commodities, and you guys know what indices are, right? And of course, like I said, if you want to get deeper into those markets, like I said, you can access information on for free online. Just look up like Forex, and then you can learn even more about it. But I just went over the essential, what you need to know, right? So if you want a little bit more of the small details, you guys can do more research on your own. But at least you know that now, and that you can even do deeper research for that. But now let's go ahead and get into like trading. So we're going to learn trading. And the first thing I want to talk about is sessions. Okay. So we have sessions in trading. Okay. So as you guys can see, local time, we have, well, we don't really talk about the Sydney open, Sydney close. But the main three sessions that are always talked about: Tokyo session, London session, New York session. Okay. Those three sessions are going to be the main thing that we look at. And then you guys will see here the Eastern time and the universal time for both what times are open. I'm on the East Coast, so I have my Eastern time zone here. So for Tokyo session, we're always it's always open from 7 p.m. until 4 a.m. And then London session goes from 2 a.m. to 11 a.m. And then New York session goes from 8 a.m. to 5 p.m. And you can trade any one of these sessions. There's no session that's better than the other. These sessions fluctuate depending on, the economy. There's a lot of things that can factor into where the volume is coming from for each session. And we'll go into a little bit more details about that. But I just want you guys to know the different sessions and to trade. And then we can actually look at the charts, so you guys can just see it on like how it looks on the market. All right, so this is how it's going to look on the charts. So you guys see here, we have the New York session here. This is actually a trade that I took with my VIP today. So you see here, Tokyo session, not Tokyo, New York session here in the blue. We have London session in the green and Tokyo session in the red. Okay. And like I said, we had some nice volume today on New York session, but that can always change, right? Sometimes we have London session with great volume, and then other days we can have Tokyo session with good volume. So we got Tokyo session with good volume, New York session with good volume. So you can pretty much essentially trade any session that you want. So there's no bound to it, but you guys can see here the different sessions here, right? So New York, London, Tokyo, New York, London, Tokyo, and this fluctuates, right? So for this week, we've been having a lot of New York session volume, but if you go into like last week, we've been having a lot of Tokyo session volume. So like I said, this fluctuates, this changes, and learning how to have access to the volume at certain times, being able to read price. We're going to get into that in this course here. So I know you guys are kind of looking at the charts and you don't know what's going on right now. I know you guys see a bunch of candles and stuff like that, but we're going to learn all that stuff here on this course. All right. So those are the trading sessions. Like I said, these are going to be the main 3 that we're going to focus on. This is really all you need to know with the 3 sessions to trade. All right. So now we're here. How to trade. So we're going to get into lot sizes, pip count, stop loss, take profit. And even if you're not new to trading, I'm pretty sure there's going to be some information on here that you do not even know, because I get a lot of questions about like lot sizes and stuff. And these traders will be trading for like a year. And, you know, I find that a lot of traders these days, they skip the beginner part of trading. Like they just try to learn how to trade, but they don't know the foundations of day trading. So I know there's going to be some things here that you guys are going to learn. So what is a pip? Okay. So a pip. All right. So you probably heard this term a lot with trading, pips. You're going to hear it all the time when it comes to, especially with Forex, when you're trading Forex or any metals, you're going to hear the words pips, right? And so what is that? It is a unit of measurement to express the change of value between 2 currencies. It's called a pip. So for example, if you have your USD moves from 1.1050 to 1.1051, that is 0.0001 US dollars rise in the value is 1 pip. Okay, so that's essentially what that pip is. A pip is usually the last decimal place of a price quote. So that's what a pip is. And the reason why we need to know these calculations is because this is how we calculate our risk. Okay, so when we are essentially day trading, so if we place like a lot size in the market, we got to know, we can't just put any lot size. We have to know the X amount of pips so that we know what the risk is, like what's the dollar amount we're going to make or lose on this trade. Okay, so most pairs go out to 4 decimal places, but there are some exceptions, like the Japanese yen pairs, they go out to 2 decimal places, right? So for example, the Euro USD, it is 0.001, and for USD yen, it's 0.01. Okay, so for every 0.01 pip moved in the pound yen, the value of 10,000 units position changes by approximately $1.27 USD. If the currency you are converting to is based on the currency of the conversion exchange rate ratio, then multiply the found pip value by the conversion exchange rate ratio. Using our USD CAD example above, we can find the pip value of 0.8 USD and the New Zealand dollar. We'll use 0.7900 as our conversion rate for example. And then this is the conversion rate. So this is pretty much like how you're finding the X dollar amount when you place stop losses and TPs before you want to place like your lot size. This is essentially how you are calculating what you're risking, how much you want to make, and this is essential. And I know I just threw a bunch of numbers at you. You're probably like, Angie, I'm so confused. Like, what is a pip? Don't worry, okay? You're gonna get it when you start trading more. But the good part about it is we don't need this anymore. Okay, so we don't need formulas anymore when it comes to calculating pips. Okay, now back in the day when I started trading, we had to calculate our pip. We had to have a formula to plug in into like the dollar pair or the New Zealand pair or the yen pair to find out what our loss will be or what our target will be. But now these days, brokers, they just have it set up for you to where you can, it's just like a drag and drop now. So you don't even need to learn how to calculate a pip anymore. Okay, every broker, I want to say 99% of brokers will have the pip calculator, right? So let's go back into our market replay review here. Okay, so let's say you want to just sell at one lot size. You want to sell at one lot size. And as you can see here, you got 0 USD. Every broker now, you can control by just dragging the stop loss. So you can just go this way and you see how it's going, negative $2, $3. Let's say you want to risk $10. You can just do it like that. Boom. Easy. And then you have $10 risk. And then your TP, let's say you want to make $20. Boom. You can just do that easily. That's pretty much essentially what it is now. You don't have to look at the price. So you don't have to go to gold and be like, okay, gold is at $3,338. And then you have to put in the lot size, calculate that into what your risk will be if your stop loss was at the 33.48. You don't got to do any of that anymore. And then as you can see, if I add more lot sizes, the risk changes. So now it's $20, $30, $40, $50, $60. Okay, so depending on what lot size I use, that's going to change the risk factor and my profit factor as well. Okay, but like I said, we don't need a calculator anymore. Every broker that you're gonna have, it's going to calculate everything for you, so you'll know what your dollar amount is when it comes to your risk and where your take profit is at. So you don't have to worry about all those numbers I just thrown at you, because I know it can be confusing. You're just like, man, NTG, you're talking about 0.001 and this X amount, this and that, and it's so confusing. And it's like, yes, but thankfully we don't have to calculate that anymore. Just know that a pip is just a unit of measurement between the two currencies, right? So that's all you need to know when it comes to a pip. You don't have to do any calculations or anything like that, thankfully. Because, man, when I tell you, I struggled with that. And if you've been trading Forex, like if you traded back in 2010, 2011, 2015, you knew the struggle of having to get some pen and paper or your calculator out, and you had to put those numbers in before you were able to even place a trade. So that's how it was. You guys are new traders now. You guys have the luxury of just having everything out for you. Okay. So what is a lot size? Okay, so that's what I was just talking about. So the lot size in Forex is commonly traded in a specific amount called lots. Okay, so basically that is the number of currency units you will buy or sell. Okay, so that's what the lot size is. So a lot is a unit measuring a transaction amount. And that's why when you saw me selling more gold with the one lot, the price of my risk kept increasing. Okay, when you place orders on a trading platform, orders are placed in sizes quoted in lots. Okay, so that's what it is. And see, so this will be the exchange rate calculator here, and this is essentially like how we used to be able to calculate how much money we will lose or gain. So we had to do all of this just to get to $9 and round it up to 10. Okay, but you don't have to do that anymore. So this is not essential. We just need to know what our lot sizes, and pretty much a standard lot, a mini lot, a micro lot. That's pretty much like the most common used lot sizes, but this can change. You can have like a 0.2, 0.3, 0.4, or you can have a 0.23, a 0.47. You can have $1.47. I normally like to keep my numbers round. I see some traders, they do trade like 0.08, 0.09. They like to trade like 0.12, 0.3. I like to keep everything solid and rounded, so I just normally just stay at 0.10 or 0.50 standard lot. That's just my game, and it's easier for me to calculate my risk that way. So, but that is essentially what a lot size is. It's just like what you're going to, the amount of units you're going to be placing, and that's how you can control your risk. All right, so what is spread? All right, so let me go ahead and sorry guys, let me go ahead and get a drink of water real quick. Make sure I got to stay hydrated. All right, so what is spread? Okay, so Forex brokers will quote you two different prices for a currency pair, which is called the bid and the ask price. And it's funny that a lot of traders don't even know this. They've been trading for years and they still don't know what a bid and ask price is. I find that kind of hilarious. So this is going to be essential for you guys to learn. So a bid price is price of which you can sell the base currency, and the X is the price at which you can buy the base currency. Okay, and we're also going to look at how it looks on the chart as well. So I'm gonna pull that video up here soon. So the difference between these two prices is known as spread. So the difference between price, the bid, and the ask price. And like I said, I know it still may be confusing, so we're gonna look at the charts so you guys can get a visual representation of what bid and ask price spread is. Okay. So how bid and ask price works: when you are buying, you'll pay what the broker is asking you, and when you are selling, you need to accept what the broker is bidding. So this is how the bid and ask price works. Okay. And then if we look at our example here, you guys will see here we have the bid and the ask price. But let's go ahead and look at the charts real quick so that you guys can see what bid and ask price is. All right, you guys. So here is the charts. So I'm just going to give you a visual representation of what spread is pretty much. So, and if you're an experienced trader, you may not even know this as well, because I get this a lot in my Discord about like triggers of stop loss and TPs, which is we're going to be looking at next, and why certain like TPs and stop loss don't get triggered. So the spread is pretty much the difference between the price of the ask price and the bid price. So that's spread. Simple enough, right? And depending on the broker that you're using, this can be smaller, right? So the spread between the ask and the bid price can be smaller, or it can be larger. So just be careful avoiding any brokers with like high, very, very high spreads, because what happens is, why that's important is because, say gold, right? The price of gold right now is at $3,337.62. So when you place a trade, let's say you wanted to buy gold, right? So when you're buying, you're trying to get the ask price. So when you buy gold, you don't buy here, you buy at the ask price, which is here. Okay. And that's why when you place a trade, you will start your entry, right? Let's say your entry was there. It will start in a negative. So like -$5, because this is where your position is right here, currently floating. It's not where the price is currently with gold. Now, once gold starts to, when the actual price of gold starts to move up over your ask price, then you start to accumulate profit. So that's how it works with that. And then the same thing for sales. So if you're selling, right, that means you're bidding. So let's say at the current price again, gold is here. You want to sell gold because you think the value of gold is going to go down. So your bid price will be here. Your sell point will be right at the bid. And then again, you'll start with like -$5, depending on how big and how small the spread. And if you watch live market, you will see the ask and bid price spread increase, decrease. That's completely normal. Especially with high impact news, sometimes the spread can get up to like 10 to 20 pip spread sometimes. So it gets crazy with high volume. But that's pretty much like a simple summary of like what the bid and ask price is. And if you're an experienced trader and you always wonder, let's give an example here with the bid and ask price. Let's say you bought gold, right? Let's say you bought gold and it hits your TP somehow. So I'm going to kind of just like draw it out a little bit with the market replay mode here. Okay. So this is the current price. Let's say your ask price was here. So this is where you bought gold. And let's say you're floating in profit right now. You're floating like $500 right now. And your TP is here. And let's say your gold is working up towards your TP. And this happens a lot with traders that really don't understand how bid and ask price works. So let's say you're here, and then let's go back here. Well, let's say your TP is right here, right? Let's say your TP is right here. This is where you want to take profit. and then you wake up in the morning and you see that the market hit your TP and it reverses. So it starts to drop back down, right? And I'll get messages on my Discord like, man, NTG, like this broker, they didn't trigger my TP, but they don't understand how that works with bid and ask price. So your ask price, let's say your ask price is here and your bid price is here. Now, what traders don't understand is that in order for your TP to get triggered, okay, it needs to touch the bid price, not the ask. And that's what traders get confused, because the market will nick their ask price or the price of gold, and they'll be like, "Whoa, no, this should have triggered my TP." But they don't understand that it actually needs to hit the bid price. So this bid price has to go over the TP trigger for you to actually lock in the profit. And that's how that works. But for your stop loss, let's say you had a stop loss, then it's the same. So if the market is going down, the first thing to stop you out, if your bid price hits your stop loss, let's say your stop loss is here. If your bid price hits the stop loss, it's going to trigger you out. And if the bid price hits your TP, it's going to trigger you out. But it's a lot harder for the bid price because it's at the bottom. So the ask price crosses your TP first before the bid price. And that's how that works. And that's why sometimes if you ever, I'm pretty sure it has happened to a lot of you guys that have been trading for a while, where you wake up and you see your TP get nicked and you're confused on why you didn't get triggered out the trade. Why didn't it lock in my TP? And the reason why I didn't lock in your TP is because your bid price did not cross the TP point or your ask price if you're in sells, right? So it's the same. If you're in sells, it'll be the ask price. If you're in buys, it'll be the bid price. So you have to be very, very mindful of that. And that's why it's important to know spread, because you have to accumulate. You have to, keep in mind about the spread and where you want to put your TP. So if you want to put your TP a little bit lower because let's give it another example. Let's say you have a resistance here, a big level of resistance. And I know we haven't gone through that yet. We will in the next lesson. But let's just say you have resistance. Resistance is just where pressure comes into the market for sells. And we know we're going to get some high sells here. So what happens with traders is they put their TP right, like somewhere in the middle or right at the top of the resistance. And that's how they get nicked out. Well, they don't get nicked out of, they don't get triggered out of this trade because their TP is too high right at the resistance. So you have to keep in mind the spread. So if you see the spread, you're saying, actually, you know what? No, let me lower my TP down here before we hit the resistance, because I know my bid price has to hit that TP. And I don't want the market to turn at the resistance before the bid price hits my TP, right? So that's how that works with spread. And that's pretty much the summary of spread. And you guys can go to the charts and you can actually click these on so that you can see that your bid and your ask price is active. So you can actually see the actual spread of the market. So I know if you're completely new here, you still kind of get the concept of spread and the bid and ask price. But if you're not new, you've been trading for a while, you know how to trade, and you didn't know this, well, now you know on why when you place trades, sometimes you'll be in the negatives, and also why your TP didn't get triggered sometimes, because it has to do with the spread. All right. So that's pretty much a visual of what spread is and what the ask and bid price is. So that's the more you know. So that's what we're going to be going through. All right. So now you guys know the more you know. So I know some of you guys didn't know that, especially if you guys were trading, and why you always didn't get your TP hit. Well, that is the reason. So now you know why the ask and the bid price is important when it comes to trading. All right. And then lastly, let's talk about stop loss and take profit. So what is stop loss and take profit? Well, stop loss is pretty much going to cover you on the market, right? So let's say you bought, this is the pair that you bought, and then you will place a stop loss below that position because it's a buy. As you can see here, we have our stop loss. So essentially is the market stops you out and it avoids more of a loss. So let's say you're not watching the market, you bought gold, for example, and you're not watching it, you're at work, you will place a stop loss just in case gold continues for sell. So you're not losing so much money, right? So you can cap out at how much you want to lose. So you'll tell the broker, hey, I want to get out the market with this loss if the market approaches this price. Okay. And it's the same thing for take profit. So you'll say, hey, I want to close my trades at this take profit. I want to take my profit here at this price if you're not watching the market, and the broker will automatically trigger you out of the trade depending if you hit your TP or your stop loss. So this is more like where you can control your risk and you can control your take profit, especially if you're working and you cannot be on the charts. You actively have to use stop loss and take profit because the market has a lot of volume. It moves quick. And if you guys have been trading for years, you guys know it only takes a split second for you to get distracted, for you to not get out of a trade on time. Like that's all. It only takes a split second for you to miss out the difference between a profit or you getting out of trade before you lose more money. So you got to be very careful with that. And you have to be very precise with using your stop losses and your take profit, especially if you guys are always on the move. All right. So now let's talk about leverage. Okay. And leverage is a big thing here. And I think leverage is the main reason why Forex is so popular, right? Because of this leverage. Like this leverage, you don't get these same leverages when it comes to trading stocks. And that's why a lot of people like to come into the Forex, because leverage in Forex trading allows you to control a larger position with a smaller amount of capital, right? Because not everybody around the world has $100,000 in their bank account or $250,000 in their savings to where they can just buy a whole lump sum of stocks and things like that, right? To make like some real capital gains. So this can amplify both profits and losses. While leverage can increase potential gains, it also significantly elevates the risk of losses. All right. So we have to be careful with this. And if you guys see that chart on the right hand side in the corner, this is essentially what the leverages look like in ratio. So you have a 1-to-1, a 1-to-10, a 1-to-50, 1-to-100, 1-to-200, 1-to-500. And it even goes up to a 1-to-1,000. I used to have an account that had 1-to-1,000. So if you guys see like my old videos where I'm doing like account flips with like $150 and I'm flipping it to like almost like $2,000, it's because I have such high leverage. I can risk way more in my account. And to give you a visual representation of what leverage is, so pretty much like if you had $1,000 account, right? It's almost like you can trade a $10,000 account depending on your leverage, okay? Sometimes even more. So that's what leverage gives you. You can put in a little bit of money. You can put in $50, $200, and you can make up to thousands of dollars depending on your leverage. And I think that's one of the main reasons why Forex was so popular, and it still is to this day, because you can trade small capital, and it's essentially like having big capital in your pocket. Okay, so leverage is the increase of trading power that is available when using a margin account. Okay, leverage allows you to trade positions larger than the amount of money in your trading account. Leverage is expressed as a ratio. Okay, so that's what leverage is. So like I said, if you put in a $5 account and you have a 1-to-500, it's like having close to $5,000 account. Like it gets that crazy. And that's why I know some people in my comments are like, oh, like this has to be fake. Like, how can you make thousands of dollars with just $200 in your account? This is why, because of leverage. Okay. And that's why it's so popular in this game to take $10 to $500, take $500 to $2,000, and so on and so forth, because of leverage. Because with stocks, you can't do this. You can't do this with stocks. You don't have that leverage. You just have to buy those shares. So whatever, like if a share is $200 something, that's the share that you buy. And with stocks, you need X amount of money to really, really make big gains. And so I think a lot of people were looking for a market that allows small capital traders to come in and to pretty much make a actual sustainable passive income. And leverage is the big part of the Forex movement. So leverage is everything when it comes to trading, even metals or even indices, all of that good stuff. Okay. So this is what a trading account will look like on your phone. This is an old MT4, so this is outdated. But if you guys trade with MT5, this is what it will look like still, essentially. Or if you trade with like TradeLocker, which is what I use, everything you need to know, this is what it is, right? So you have the balance, which is your cash. Your equity is the floating profit or loss. So if you're floating green or red, your equity is showing you what you are currently floating. So in your trading platform, you will see something that says unrealized P&L or floating P&L, which will be green if you're in profit or red if the numbers are going against you. Okay. So that's what equity is. Margin is the biggest appeal that Forex traders offer, is the ability to trade on margin. And like I said, this is a big part because margin and leverage goes hand in hand. And this is the big part of why a lot of people trade Forex, is because it gives them spending power. So margin trading gives you the ability to enter into positions larger than your account balance. Okay. This is unheard of. Like, you're not supposed to be able to have the ability to enter positions larger than your trading account. But when Forex changed the game that way and it introduced margin, now you're able to do that. But like I said, there's more risk involved with this, but the reward is also just as high. So that's what margin is. It's just the spending power. And you guys can see here, this circle, this oval shape here, that's the lot size. So buy at $1, sell at $1, buy at $1. So that's just the lot size is there for that. Okay. And then free margin is essentially the amount available to open a new position. So if you start to run out of free margin, then you won't be able to enter a new position. So that means big part of that is like your account is in some strong negatives. And depending on where your margin level is, the broker can actually close the trade out. So it will force you out the trade. So with margin level, right? If your account margin level reaches 100%, so you guys see here with the percentage, you will not be able to open any new positions and you can only close existing positions. So margin call level at 100% means that your equity is equal to or lower than your used margin. So the max margin level that I've seen is 150%. So once your margin level hits that, that's a blown account. So all your positions will close automatically, and that's like essentially losing all your money when you get to that point. But you don't have to worry about that because we will be talking about risk and controlling the risk and so on and so forth. If you're getting margin call, that just means like you're being greedy. So you're trading with greed. I know some of you guys watching this video and you're still struggling with your greed, right? And so we're going to be talking about trading psychology coming soon when it comes to, finishing up this course. I want to say trading psychology will come into this course maybe in the mid section of this course. So that's when we're going to start talking about trading psychology. But that's pretty much like everything. Like when you sign up for a broker and then when you deposit money in your account, this is what the terms you will see. And that's what everything means there. So that's what that would be there. All right. And then we have our charts. But we already looked at our charts, so we don't have to look at charts here. All right. So now we're going to get into brokers. So this is how you're going to be able to access accounts, be able to trade these pairs. So we're going to talk about the last thing, brokers. All right. And then after we talk about brokers, in the next lesson, we will talk about like actual technical analysis. So you guys will learn how to actually analyze charts. That will be the next lesson there. So brokers, right? So just to let you guys know, there's two different types of brokers. There's regulated and unregulated brokers. Okay. So regulated brokers simply are just brokers that are licensed and monitored by authorities, the government, financial conductor authorities, so on and so forth. SEC in the US, That's what a regulated broker is. They are governed, okay? And with regulated brokers, your accounts are protected, okay? These authorities set strict rules and standards that the broker must follow to protect investors and maintain market integrity. So, for example, regulated brokers are required to segregate client funds from their own operating funds, provide regular reports on their financial health, and maintain a certain level of capitalization. Okay, so that's what regulated brokers are. It's pretty much certified licensed broker, protected and governed by the government. Okay, now unregulated broker, on the other hand, okay, they are not licensed and they're not monitored by regulated authority. Okay, this means they're not subject to the same rules and standards as regulated brokers and may not provide the same level of protection for investors. So if you have an unregulated broker, your money is not safe. Okay, well, not safe. I wouldn't say it's not safe, because it is safe, because I use unregulated brokers. But essentially, like, if the unregulated broker that you're using, let's say they file for bankruptcy or they just kind of like disappear from the face of the earth, well, then like you can't go to the government and be like, hey, like this unregulated broker has my money, I can't get my money. It's like your funds are lost. But some unregulated brokers are not safe, and we're going to talk about that, which unregulated brokers that you can trust and which ones that you can't. Okay, so unregulated brokers may also be more susceptible to fraud and scams, as there is no external oversight to ensure that they are operating in a fair and transparent manner. Okay, but some potential advantages of using these brokers, like I said, is such as lower fees, more flexible trading conditions. So what it means by more flexible trading conditions is like those high leverages you guys are looking for, right? Those 1 to 500 leverages, those 1 to 200 leverages, so that you can just deposit $100 and you can get a bang for your buck there. All right. However, these benefits may come at higher risk to investors, as unregulated brokers may not provide the same level of security and protection as regulated brokers. So that's pretty much what you're doing. You're risking security for higher amounts of money, because with regulated brokers, you can't have that same one. They don't have 1 to 500 leverage, 1 to 200 leverages. Like, they don't have that high leverage rate that you guys may be looking for when it comes to trading. Okay, they have like a 1 to 1, a 1 to 10. They monitor your risk. It's very governed. It's very restricted, and it's going to be very, very hard to build accounts with regulated brokers, but it is the safest. Okay, so when you guys see my account builds, I use unregulated brokers, and that's where I'm able to get those high leverages and all that free margin to be able to just grow accounts quickly. Okay, so I just wanted you guys to let you guys know the difference between these two type of brokers. All right, so let's go ahead and talk about the brokers that I use and brokers that are trustworthy, depending on where you live. Okay, that's also going to change. So U.S. regulated brokers. Okay, so if you're in the U.S., okay, you're going to have like low options. Okay, so because with the whole ban that happened with MT4, a lot of brokers stopped giving services to U.S. clients. Like Tradersway, I still have an account with Tradersway, but it's hard for me to get my withdrawals now because I am in the U.S. So when you are in the U.S., it's going to be a little bit more difficult to find an unregulated broker, but we do have some good regulated brokers like TastyFX, Forex.com. Charles is good for stocks. If you're looking to like buy shares and stocks, Charles is a good app to use, but it's not like a day trading, so you won't be able to like control like your trades like how you would for these two pairs, which is Forex.com and Oanda. Okay, these two are, if you want to get into like day trading and you want to like place positions, you want to actually be a trader, these are the two regulated brokers I recommend. Okay, they trade Forex and they trade metals like gold. But if you wanted to trade indices like NAS 100, US 100, US 30, S&P 500, these are not available to you here. Okay, so if you want to trade indices, you have to get with the unregulated broker if you're in the US. Okay, so that's just a disclaimer there. All right. Like I said, this is limited to only Forex and metals. Okay, so but if you only want to trade, if you only trade like gold, for example, or you only trade Forex, then these regulated brokers will be great for you. These are brokers that I use, and like I said, they're regulated, so you don't have to worry about the safety of it or if they give payouts and withdrawals. Like, they're regulated by the government, so they have to do that stuff. Okay, so your money is completely safe with these brokers. All right, now if you want an unregulated broker and you're like, NTG, I need something with that high leverage, unregulated broker that I use is KOT.Forex. Okay, so I've been using this broker for 4 years now, or for 4 years, and I have no issues with them. Okay, yes, I know it's an unregulated broker, but I've never had, like, they never held my money for X amount of time. They never emailed me saying, oh, like, we're gonna hold your funds. Every time I deposit, it goes straight through. Every time I withdraw, it goes straight through. 15 minutes to an hour, the longest, and my money is in my crypto wallet. And that's a big key thing here. Okay, with the unregulated brokers, they use wallets. Okay, so like Coinbase, they use wallets to do transactions. So with regulated brokers, you can use bank transactions, but with unregulated brokers, you have to do your transactions through a crypto wallet, because they only accept like Bitcoin, USDT, Tether, Ethereum. They only accept those type of cryptocurrencies as payments. So if you want to get into the unregulated broker, you'll have to get a wallet, and you'll have to like buy some Bitcoin or something like that. And that's how you're going to pay the broker. And then the broker is going to put the money in your trading account, and then you can have a trading account there. And then anytime you want to withdraw money, the broker will send you the money via crypto wallet. Okay, so they're unregulated, so that you're going to have to take that extra route. But like I said, I've been using them for 4 years. No issues with them at all. I even built my foundation with this broker. So they're legit. But like I said, it's not going to, like, if KOT just all of a sudden disappear, your money's not protected. But I do actively use them to this day. Okay, and as you guys can see here, the reason why I use them as well is because they have everything. So they have from FX majors, FX crosses, FX exotics. They have indices, energies, cryptos, you name it, metals. They have every single thing that you can trade in the market. Okay, and that's why they're one of my favorite brokers to use. And of course, the leverage, they give you a 1 to 500 with FX pairs, 1 to 200 with indices. So yeah, so this is why I use them. But like I said, just be cautious of that. I gave you guys regulated brokers. If you want to take this route, you're doing that at your own risk. Okay, just letting you guys know that now. But like I said, I've been trading with them for years, and I had no issues, 0 issues with them. I had all my payouts come in essentially every single time. Okay, so but if you're not in the US, okay, if you're outside the US, okay, then these are still great for anyone outside of the US. So you guys have way more options when it comes to brokers. Okay, and you guys can even use KOT as well, and you guys can use those other brokers if you're not in the US. And there's some other brokers that I used to trade with that I loved. Tradersway, man, that was my OG broker, and they're still here to this day. That I used to trade all my pairs with back in 2018, 2017, 18, and 19, even 2020, before they banned US clients in 2021. I was still able to trade with them with my leverage for a while, for like a year. And then a big thing happened. It became an issue to like withdraw my money since I was in the US. So I had to do some like backdoor stuff to get my money out the broker. But yeah, but if you're outside of the US, that would be like my #1 recommendation, Tradersway. That was a great platform. I wish I could still trade with them, but unfortunately I can't do that anymore. So, and they take well, I haven't actually been with that broker for years now, so I don't know if they take bank, but they used to take direct deposit, and they used to take crypto as well. So, but if you guys want to look into that, you guys can go on their website. IC Markets, also another good platform. IG, okay, good platform. 8cap, also a great platform there. So those are some brokers. Like if you guys are looking, if you're outside the US and you guys are looking for some good brokers with some good leverages, these are the 4 that I would recommend. These are 4 that I have used here before, you know, they did the whole ban with the US. Okay. And then they use MT5, they use WebTrader. They have all of those platforms that you guys see on like videos and stuff on like using these brokers. So that's what I would recommend there. So yeah, so those were all the brokers there. So if you're outside the US, you can use any of these. If you're in the US, you're kind of limited to what you can use, which is like 2 regulated brokers and 1 unregulated broker. Okay. And if you guys have some other unregulated brokers in the US that you guys use, comment in the section below. But I want to make sure that you guys do your research on these brokers, even the ones that I just claimed. Okay. I do use them, but I want you guys to still do your own research. Go online. Make sure you guys dig deep into these brokers to make sure that you're trusting them with your money. Okay. So make sure you guys do that. Don't just hop onto it and be like, oh yeah, we good to go. Okay. Make sure you guys do your research. I want you guys to understand that this day trading thing with unregulated brokers, there is a risk. Okay. But if you take the regulated route, you'll be good there. You can sign up with an account with them. It's all governed. You'll be good to go. So you don't have to worry about that. All right. So that's pretty much it for this lesson. I was trying to make this a quick video, but like I said, this is going to take a lot of time. I know this video is going to be like an hour, maybe an hour and a half long, but that's going to be for today's lesson. Like I said, we're going to be doing a free course the whole time we are here. So the next lesson, we're going to be looking at chart analysis. So how to analyze charts, how to analyze the markets. I'm going to be teaching you guys like different techniques on it. And the next lesson, we're going to be talking about Japanese candlesticks. So like I said, this is going to be a full long course. So we got a long journey to go. So I hope you guys are here for the journey and we get through all these lessons. I want to try and do this series in 10 lessons. I want to say maybe 10, 11. I think I can fit everything in 10 lessons. But yeah, you're going to have like, I think 30 to 40 plus hours of like how to day trade. It's going to be crazy. So there's going to be a lot of information. Like I said, this is going to be available soon in a playlist. So this is the only video that I have now. But if you're watching this in the future, then you probably have access to more than one video, or if not all of the videos already. So you can go ahead and just watch the lesson 2 now. All right. So, but I do hope you guys walk the journey with me on this course, and you guys really do enjoy it. And if you guys are looking for that restart on this will be the intro. And then in lesson 2, like I said, we're going to have so much more information, a lot more chart work is going to get done. I just wanted to do the PowerPoint because there's a lot of like basic terms and things like that traders need to learn coming into this game because they don't know it, right? But yeah, but it's gonna get real exciting soon when we get on those charts and we do our breakdowns and how to draw trend lines, how to draw chart patterns, things like that. So I hope you guys are ready for that journey. Make sure you guys hit the like button, and if you want to see the rest of the course, make sure you guys subscribe so you guys can have access to this free course when it's all complete 100%, and you won't have to go anywhere else for a course. You guys can come straight here. All right, you guys. So it was your boy NTG. I'm gonna see you guys next week for the next lesson number 2, and I'm out. Peace.